Welcome to the channel that flips the script on real estate, mindset, and money. I'm Rob Ragno, and I created Redefine You to do exactly that. We redefine the way you invest in real estate by first adjusting your perspective. No theory, no trends, just raw, real strategy. This channel isn't here to educate you further. It's here to shortcut your learning curve and actually get you winning. And apparently, if you like and subscribe to this channel, YouTube will turn me into your personal real estate advisor. So go ahead and hit that button below. And before you waste any more money on another course or mastermind, go ahead and click the link to my free school community below to find all the tools, resources, and the people you need to build something real with. All right, let's go ahead and get into it. If you think real estate is slowing down right now, you're not watching the right moves. This isn't another crash. This is a silent handover. In this video, I'm going to explain to you exactly what the big firms don't want you to know. We're seeing an inventory crisis right now similar to the great financial crash, only because the existing interest rates were so low that sellers are reluctant to sell into moving into a new product. Builders have been slowing down because of the tariffs on materials. Therefore, we're not seeing an actual crash. This is an artificial bottleneck. Most new investors are afraid to jump in because of the high interest rates, but what they're failing to realize, it's not about the interest rate. That's just an illusion. What you need to look at is the term in which you're paying down this mortgage. That's why they use the terminology amortization. This is where the buyers are being locked in by something called rate psychology. They're fearful to buy into a new mortgage rate because of the upfront fees and the charges that are in the market. And what you see in the headlines is just intended to create fear. You've got the big equity firms like Blackstone, Invitation Homes, Pritium Partners who are buying up the neighborhoods. So you're no longer competing against your neighbor, you're competing against institutional funds. These firms are all backed by billions of dollars in private equity, which means they're not here to flip. They're here to own for the long game. Our market is turning into a natural renter's market. So where do you think the institutions are going to be placing their money first? And what you don't see is because they're not recorded in the public headlines is that these firms are swooping in, buying in bulk and at a deep discount. They're motivating sellers like developers who are now stuck in a crisis of inventory because they can't flip what they currently have. They swoop in, they buy in bulk, often off market. They even come in and buy builder inventory before you're able to see their product on the market. This allows them to control not only just neighborhoods, but entire cities completely off the grid before you know about it. This is what's giving them the buying power and ability to control the rental rates in the market. Utilizing technology and public data, they have the ability to predict what the future rental markets are going to look like based on what people's salaries are, what their job losses are looking like, and also the rate of which people are accumulating in new properties and mortgages. And what gives these large firms an advantage over the regular investor is that they have in-house teams in which are using technology such as AI right now to predict things like appreciation, rent increases, and turnover risk. Translation, you're no longer competing with your neighbor on an investment property. You're now competing with a machine that never sleeps. And it pays in cash. No waiting, no delays on looking for mortgages, no buyer needing to qualify, no needing to provide any sort of experience sheet. These firms are coming in with cold hard cash, making the acquisition process for a seller a lot smoother. Wall Street is in this to win it, and they're not looking for a quick flip either. They're here to play the long-term game, and they're looking to create an economy full of renters. So if you want to try to learn how to beat them at their own game, my advice to you is don't try to beat them, just join them. And start by these three factors in every city. Look for migration trends, job growth, and infrastructure. Starting with migration trends right now are showing people fleeing from high-taxed, high-cost metro cities such as LA, New York, San Fran, and moving into affordable metros with job growth and affordable home prices, such as in the Southeast and the Midwest. And the top inbound markets in 2025 right now that is seeing the highest level of relocations is Tampa, Phoenix, Dallas, Columbus, Charlotte, and also some areas of the Midwest like Indianapolis and Kansas City. Right now, multi-billion-dollar companies like Amazon and Tesla are building these massive chip facilities in these underlying metros that are completely off the radar for most investors. So if you want to start buying in areas are which going to increase your cash flow and your equity appreciation, I suggest you start looking into these markets. So in other words, stop looking for price drops and start looking for job growth, because where the jobs go, the money flows. Now that you understand how these big equity firms are identifying their markets, I want you to do the same thing, but this time a little bit different. We're not buying real estate the traditional way. We're not coming in with down payment money. We're not looking for seller assistance. We're buying based on deep discounts from the property's equity in day one. What that looks like is essentially arbitraging the spread between what the property is worth and what you're paying for it upfront. This is where we use our signature POP method to profit on the purchase. This is where you have emotional sellers that are trying to hold on to their property for the equity they once thought that they had, In other words, you're going to swoop in as a strategic investor and you're going to buy that property at a discount compared to what the market value is. Other investors turn into emotional buyers. They're just consuming because they think that they need to buy property in order to grow. This gets them stuck with an emotional liability tied to a property. You're actually going to look for the great opportunities and create them into great deals. And every deal we analyze here at Redefine You, if we're not getting paid upfront in day one to own the deal, probably means you're overpaying for the property to begin with. And that brings me to my next point. Most investors, they wait till the exit to see their profit. Well, we have redefined the way you do real estate. Here, we like to look at the property in order to profit on day one, so we're not waiting for the exit. We're capitalizing on our profits on the closing. That's exactly how the POP method works. We're building in a profit on day one so we don't have to wait 6, 9 months, or maybe even a year for this property to be profitable. And we're not sitting around waiting for $100 to $200 a month in cash flow either. It's not about just chasing the equity or trying to force the appreciation over time. We're looking to capitalize on the property's value to profit on day one. The POP method isn't about just buying cheap houses. It's about positioning, structuring a deal from day one where you can capitalize on the equity that's in the property, structure the terms of your loan to build in a day one profit. And when you learn how to do this efficiently, you don't need to wait for the market to repay you. You control the deal from day one and let it pay you. With this new perspective on how you look at real estate and money, you have a greater advantage over most investors who are currently working and operating under fear, hype, and scarcity. To win at this game doesn't mean you have to be the smartest person in the room. It means you have to be obedient to the process. Surround yourself by the right people. Lock arms with those who are willing to see you win. Trust me when I tell you, the harvest is still here, but it's only ready for those who are willing to put on the lens of a sophisticated investor. So don't pray for provision and ignore wisdom. And if you want to gain some of that wisdom and knowledge, just click the link below to my free school community where you can come in, chat with me live, and explore the free tools and resources, and also a community packed with people who are there prepared to help you win. So if this lit a fire inside you, don't forget to subscribe, click the link to the free school community below, and I'll catch you in the next video.